My name is Matthew Kemps. I am the co-founder of Lone Wolf Realty Group at eXp Realty.
Matt Kirschling with Gold Star Mortgage.
And our guest.
Todd Hanzelka with Higginbotham.
There we go.
Awesome. So let's kind of start this out. Who is Todd?
Oh, gosh. Who is Todd? Todd, native Texan, born and raised San Antonio. Been in the Austin area for 23 years.
Wow.
Long enough to see most of the changes.
Matt's barely 23 years old.
Hey.
Been around as long as he has, huh?
Married, 3 kids. Been in the insurance business for going on 13 years. Yeah.
You must like it.
Love it.
Yeah.
Yeah, love it.
What's your favorite part about it?
Quite honestly, there's very few jobs, careers, professions out there that really have a sense of nobility.
Okay.
And so what's great about this job is when somebody has an issue and you're standing there writing them a check and making their life whole again, paying that bill, getting the coverage, getting the building built back, whatever the case may be. That's kind of like the ultimate warm fuzzy.
The feel good.
It's the feel good. I mean, it is. Look, this profession is not sexy. It is. I'm the last guy at the cocktail party anybody wants to talk to. I get it.
Well, you guys are close.
Yeah. Well, yeah, a little bit.
I was gonna say, yeah, me or the used car salesman.
Yeah. I think I'm one step above a carny. But what it is it's an industry that is wrought with misunderstanding. And I believe that the insurance industry markets themselves incorrectly.
Okay.
They market it as a commodity. You see the gecko on TV, and you see it's been 15 minutes, say 15%, whatever the case may be. The fact of the matter is, it's a living, breathing contract, and the insurance carrier is going to do no more and no less than what's stated in the contract. And what a lot of people don't understand with insurance is you waive 2 rights that you have as a United States citizen when you sign that contract. One of the rights is your ability to defend. You give that right to the insurance carrier. The other one is the ability to decide. They will make the decision for you. And oftentimes, an insured is giving those 2 rights up for the lowest bidder.
Yeah.
And to them, it's a piece of paper. All insurance is the same, and it's not. Every single insurance contract is different. There are standardized forms in the industry.
Sure.
But then the carrier modifies the form, submits it to the state insurance commission, and then when's the last time either one of you two picked up an insurance contract and read it front to back?
Front to back, it's been a long time.
I have an excuse. Like last week.
Yeah.
Yeah, I mean, I have to read insurance stuff more than most people just because of my job, but yeah.
I had to read it personally.
Yeah, but I mean, your regular business owner, CFO, they're too busy running their businesses, right? And they don't have time to sit down and read it front to back, and then you end up in a situation where you thought it was covered and it wasn't. And it is either because they bought it based off of price, they could have bought it because the advisor that sold it to them was just trying to close the deal, didn't really explain what the contract did for them. And then, you set yourself up for not being covered. And it could be a major economic downfall if the event's large enough,
Sure. Well, you mentioned that there's the major misconception. Is that it? Does that cover the major misconception?
Oh, what as far as?
Well, you said insurance, the general public, they have a major misconception. That was the first thing you made mention of. And the second one was that you feel like it's not advertised or marketed correctly.
I think that for the average homeowner,
okay,
when they're going to shop for their homeowner's policy, their auto policy, for them it's a bill, right? It's like, well, how can I save money? My rate went up. I didn't file a claim. It's up $15 a month. Let me just go shop it, right? And so they try to find the cheapest deal. And that's not how the game is played, to be honest with you.
Okay.
I will give you a great example. Was on the phone with an insured who wanted to move their insurance from the private client space because it got so expensive. We're going to talk about private client space, what that means. to the middle market, standard market, right? And we advised them to not do that because they would be giving us some coverage. I don't care. It's the bill. We don't want to pay the bill. Okay. So now they want to rent a car through, I don't know if we can say names on here, but they want to rent a car through Turo.
Yeah.
And so they're asking, do we have any liability coverage? Turo only offers state minimum liability limits. Mm-hmm. Well, so I looked at the state of Colorado insurance mandate. It's $25,000 per person, $30,000 per accident, right? Or $50,000 per accident. So that's the most they'll get. Well, I read their insurance contract, and our risk managers read their insurance contract with Higginbotham and found out there's no liability coverage for a car that they do not own.
Yeah.
It has to be an owned car. So that means their auto liability is not going to pick it up. It means their umbrella is not going to pick it up. This is a family that's worth in excess of 8 figures. And now they're upset because they wanted to save a little bit of money. Mm-hmm. And I got a text moments before walking in here that they're going to have to cancel their trip based on the fact that they're looking at it from a risk management perspective of, I'm not going to have the proper limits of liability if we were to accidentally, cause an incident that kills somebody. And it was all because they were trying to save some money.
Yeah. So what's the fix in a situation like that?
Hire an advisor who knows what they're talking about. Mm-hmm. Hire an advisor.
Because you can't just like switch your coverage or increase your coverage that day.
In today's market, no. There was a time you could. The insurance market is... I'm going to use the word in turmoil, not in the fact that it's lacking cash, sitting on $1 trillion of cash collectively with all the carriers. It's in turmoil because we are in the hardest insurance market ever, meaning capacity has been reduced by the insurance companies. They're not writing what they used to. Underwriting guidelines have been scrutinized, and they're not taking what they used to maybe take from a property perspective. We've had a major change in the frequency and severity of weather-related catastrophic losses. Mm-hmm. Inflation has been horrific for reconstruction costs. They have found out, as in the insurance industry, has determined that over the last decade, the vast majority of property has been underinsured, so they're not collecting the appropriate amount of premium based on what they're really insuring. So you're seeing more and more and more companies come out and inspect locations, determining proper replacement cost values, and then what that's resulting is it's resulting in the insured getting a larger bill. Mm-hmm. And so with all of these increase in catastrophic claims, it has become increasingly difficult for carriers to underwrite appropriately, because what's happened is you've had, let's say, a dozen carriers that have been in a particular space. Now they're no longer in that space. So it's created a capacity issue. Think of it as supply and demand. These dozen carriers are non-renewing their policyholders. And so they're all going to like 3 or 4 carriers because they're still writing business in that particular niche. Mm-hmm. And underwriters are overloaded, advisors are overloaded. And so to be able to just turn something around quickly in one day, it's not happening, particularly on the personal line space. It's not. And then on the commercial line space, weeks to get something, unless it's a unicorn, right? Unless it's a unicorn, which I hadn't found one yet. So.
And there's no just purchasing a policy or anything like that for a rental?
Well, you could. So my advice to them was, why don't you select a national franchise who's going to offer you a larger? And the response was, well, they're an hour away from where we are, and we don't want to make that drive. So you're going to have to determine, you want to assume it, mitigate it, avoid it, or transfer it on this risk.
Time or money.
Yeah, time or money. So, if you're worth 8 figures or more, then you might want to have to like change your itinerary to be able to go get the proper coverage somewhere else. So
interesting. Mm-hmm. Sounds like what you're talking about, though, in regards to the turmoil, if you will. It sounds like a perfect storm. I mean, it's not just one thing; it's a lot of things happening at the exact same time that are kind of creating that
It is.
turmoil.
It is a perfect storm, pun intended, because it's the
Right.
it's the weather related events that have created the problem that we're in. COVID didn't help, right? COVID didn't help. That created some inflationary pressure on building materials. It created inflationary pressure on labor. We're starting to see that level off.
Mm-hmm.
But the one thing that we cannot change in this industry is the weather.
Sure.
We can't do it, So we've got to figure out ways to.
And insurance companies dictate where they insure, though.
They do.
Right.
You look at Malibu. What happened to Malibu? Everybody's up in arms and upset with some of the carriers that pulled out of this of California. They told the state insurance commissioner for years, this is a problem.
Right.
And if you can't allow us to price it appropriately, we have to leave.
Yeah.
And
Do you want to explain that to the audience? Because that's something I don't think a lot of people know.
Sure. So, we'll talk about Texas, right? This is where we are. We're in the Lone Star State. We have an insurance commissioner, and all states, 50 states, have an insurance commissioner. Insurance is not regulated on the federal level; it's regulated on the state level.
Correct.
So, the overwhelming majority of states allow an insurance company to fluctuate their pricing based on the actuarial risk that they're seeing.
Mm-hmm.
Now, there's protocols and process they have to go through. They have to file particular forms. They have to be transparent on their ratings, and they got to give this stuff to the Texas Department of Insurance or the insert state insurance commissioner here. It gets approved, and then they can go and charge what they need to charge. California was a little bit different. They passed a bill years ago that said an insurance company can't raise rates based off of the environment, the climate. And
Which is kind of crazy, right? I mean, at the end of the day, insurance profit's not a dirty word, right?
No. If there is profit is a good thing. We all know that. Mm-hmm. And it's easy to beat up on, the oil and gas companies for making some of the profits that they make. Well, if we didn't have oil and gas, we couldn't operate.
Sure.
We couldn't have commerce, right? If there is one company that you need to be profitable, it's your insurance carrier.
Right.
Because when your building burns down, when your fleet of vehicles are destroyed, they're there to write the check to make you whole again. And if they don't have profit, they can't then write the check.
You mean like maybe during a riot or something like that?
Yeah, exactly.
'Cause that stuff happens
Those things happen.
in California.
In California,
Weird.
specifically. I know. So what happened is carriers started to leave the state. Mm-hmm. And they started non-renewing insureds, which is their right.
Yeah.
Based off of, I can't collect enough premium to make that pool of people in that area whole again. I get asked a lot, why doesn't somebody just create a regional insurance carrier? Well, they did that. They did that in Florida. Okay. And in 2022, I want to say it was 18 insurance carriers went bankrupt because we had a couple of hurricanes hit.
Right.
And so insurance, basic, you take a lot of people, you put a little bit of money in from each of those individuals or businesses, and then the very few that need coverage because of a claim, there's enough money there to pay it.
Sure.
It's the law of large numbers.
Sounds like socialism.
Sounds like socialism, On paper it works, but in practicality it doesn't. So, but in insurance it works. You have to have a large group of people everyone pitches in so that a few people can get the result in the event that they have something untimely that happens, right?
On the socialism side, though, like we pay different insurance amounts.
I mean, yeah,
Mm-hmm.
but not.
We're not all the exact same payment.
No.
Well, in socialism, not everybody does the exact same job.
Yeah, exactly.
But they all still get paid the same.
Well, yeah. We could go down that rabbit hole.
That's a whole other show.
We can go down that rabbit hole.
That's a whole other show. So what happened was you had not enough people to. And by the way, if they were to charge, the people that were left probably wouldn't have been able to afford the insurance.
Right.
So they pulled out, and then the fire happens.
What do you think that looks like as far as potential gentrification? We talk about gentrification all the time in our business in regards to taxes going up, people, whether it's mortgages they can't afford to be in an area.
I got average lot sale.
Well, I mean, hypothetically, if you have a mortgage, you are required to carry insurance.
Mm-hmm.
And so, hypothetically, you might have somebody who now their insurance premium goes up so much because they're required to carry insurance that individual can't really afford to live in that home anymore and now has to sell that property. That, by definition, is gentrification.
Yeah.
And we see it with taxes. I'm just curious to get your thoughts in certain areas that have a lot of weather-related issues. If insurance premiums continue to come up, is that just going to be another angle to gentrify people out of certain areas?
I think it absolutely could, because if you can't afford to live in a location, you're going to have to move somewhere else that you can afford.
Right.
When you insure a property, you insure it for the replacement cost of the improvements on that property.
Mm-hmm.
You can't insure the land.
Right.
There's market value for the land. So, if you go back to the personal line side of insurance, if you qualify or if your home qualifies for a particular type of carrier, in our industry, we call them private client carriers. They're designed to insure homes that cost in excess of $2 million or more to rebuild. Not the market value, not the taxable value.
Well,
Right.
Cost to build.
Yeah, just the cost to build. Well, most of those carriers, if not all of them, have a clause in their property coverage that if it's a total loss and you decide, I don't want to live here anymore, they'll just pay you cash. Whatever the dwelling limit is. If it's a $4.5 million home insured for, they'll just cut you a check for $4.5 million less your deductible, and you can walk away and you can give the land up to the insurance carrier. Well, suffice to say, I would bet most people in Malibu probably didn't have that type of coverage. So they're left with having to face the decision of, do I rebuild a home I probably can't afford? Do I have enough coverage even to rebuild my home?
Mm-hmm.
Because some of these homes are going to cost more to rebuild than they were to insure. And so if the policy contract states that I'm just going to make up some numbers here, but if it's a $500,000 rebuild cost or dwelling limit on the home, and your home cost $800,000 to rebuild, if it's not endorsed correctly, you're going to get $500,000 and that's it.
Yeah.
And so if it's going to cost you $800,000, you're out of pocket $300,000. Sure, you go get a loan.
Yeah.
Talk to a guy like you, go
Right.
get one.
Lend on the land.
Yeah, but it's a problem. Could it lead to gentrification? I think absolutely it could, because if enough people decide to just wash their hands of the situation, I'll move somewhere where it's more affordable to insure, then they're just going to walk away.
Yeah.
What do you think the average quarter acre lot was selling for
What, in California?
in Palisades right now?
Oh, I don't know.
Just
I
give
have
me a
no idea.
guess.
Quarter acre lot in the Palisades, 1.5.
Close, 1.3.
Wow.
It's like I do this for a living.
That's not your first rodeo.
Yeah.
Yeah.
It's almost like if you put your tinfoil hat on, it's almost like, you probably for every 3 nice homes, you had that one like shithole of somebody who was living there. And then there was 3 more nice homes. And one day someone was like, what if we just burnt this whole fucking place
thing down.
right? And we just rebuilt it new, and then the people who had their paid off homes can't afford to live here, and then they have to go somewhere else, and the rest of us that were insured correctly and everything, we could just build new, and we'll just gentrify this neighborhood like a motherfucker.
Mm-hmm.
Weird.
Yeah.
It's kind of creepy, right?
It is.
But people don't do bad things. There's not bad guys.
No,
out
we
there.
live in a perfect world.
No, absolutely not.
Speaking of bad things, one of the things that always does really, really well in clips, obviously keeping names out of the equation. What's one of your craziest insurance stories as far as somebody doing bad things and trying to get insurance payouts?
You know what? I'll be very honest. I have never, ever had a case of
good.
somebody trying to screw over an insurance company.
You ever heard a story about one from a colleague or?
Honestly, no, and I'm going to tell you why. When I got into this business, I had a choice to make. The choice was I can either sell on price or I could sell on advice. And the vast majority of this industry sells on price.
Oh, yeah.
So it took me a little bit longer to build up my book. It took me a little bit longer to start making, decent money. But I was picky and choosy of who I chose to hire as a client. also gave me the right to fire them if I didn't like what they were doing. So I built it, and my colleagues around me, we all built it off of the premise of we're going to find quality risks, quality companies, quality individuals who are like-minded. Everybody likes to save money, right?
Sure.
But at the end of the day, you hire me because I'm going to tell you what you need to hear. I'm not going to tell you what you want to hear. And so many people in this industry tell the client what they want to hear. They may sell it cheaper knowing that we're leaving off an endorsement that's pretty vital, or we're increasing the deductible that we're just not going to tell them.
Yeah.
And then they see the savings, and then an event hits, and then they realize either A, I'm out of pocket 3 times more than I would have been because you increased my deductible and didn't tell me because you just sold it based off the savings. So I'd love to come in here and talk about like some really crazy, wicked stories of people trying to mess over the insurance carrier. But I'll be honest with you, I don't know any because
That's good.
I surrounded myself with quality advisors who had the same mindset of we're going to give advice. We're not going to sell it on the premium.
Yeah, price is only discussed in the absence of value.
Yeah, it is. It is.
Well, and I think that, we see this a lot in obviously real estate and in lending and insurance. And I think the biggest reason it happens is because, well, twofold. Number one, I think people who enter into this space, a lot of people don't make it, right? And I mean, like there's insurance guys do insurance for a couple of years and then they're out.
Yep.
Same thing with real estate. And I think that people don't stay in long enough to feel the repercussions of doing it the wrong way, right? And the same thing goes for the client. When I'm dealing with first-time home buyers, for example, or maybe somebody who's bought like only one other home in their life, like if nothing bad ever happened on the lending side or anything, they are more willing to cut corners. But then you've got the client who has purchased a home before, maybe had a terrible experience with the lender, a terrible experience with the real estate agent, and that individual, the idea of value, it just seems to resonate a lot more, which is a shame because I know you probably feel this way when you come to the referral aspect of things and someone wants to refer you a piece of business and then they end up going with whoever's the cheapest and they don't go with you. I know for me there's an initial kind of like, man, I lost that deal. But at the same time, I'm like, I know how this is going to go.
Yeah.
And unfortunately, you get that pat on the back after the deal closes, and they're like, we wish we would have used you, kind of similar to the story that you just told.
Yep.
And that for me is the hardest part of what we all have to deal with and do.
Well, I learned, I got burned a lot, starting off in this industry from clients doing exactly that, seeking my advice. And then at the end of the day, came down to sign the deal. And, we went with this guy because he's $100 cheaper. So what I learned was I was like, you know what? I'm just going to tell people up front. If you're calling me for advice, counsel, and a guy that's never going to leave you and going to tell you what the true facts of the matter are, I'm your guy. If you're calling me to try to save 10% and you're going to call me every year because your premium went up, I'm not your guy. So I don't want to waste your time, and I certainly don't want my time wasted either.
Right.
So if we are of like kind and quality, we have the same mindset, let's do business together.
Yeah.
If you're just, you're passing in the night, you just want something, dude, do it online.
Right.
Do it online.
It's very similar to our listing
Call
presentation.
home site.
Yeah, exactly. And then you'll call me in a year because it wasn't right.
Similar to our listing presentation, we'll go, one of 3 things are going to happen today. 1, you're going to work with me, and that's fucking awesome. 2, you're not going to want to work with me. That's not so great. 3, I'm going to have to respectfully decline the opportunity in general because I can't exceed your expectations or match your goals. And I'd rather let you down now than 6 months from now.
Yep.
And then when that conversation comes up, it's like, whoa, wait, no, I don't. It almost creates a FOMO at this exact same time, though.
Yeah, it does. Well, I liken it to dating.
Yeah,
Sure.
It's very much so. Our sales in general is just like dating.
Oh my gosh, there's that 5 steps of the dating cycle and the sales cycle, right? You got to get somebody's attention, you got to ask questions, you got to present something, relay facts and benefits, and then eventually close them, whatever that means. And God, I wish I would have, figured that out way earlier in my life on the dating side. I would have saved a lot more money and had a lot less heartache.
Yeah, it goes back to, okay, so you have 25 talk-tos or conversations. How many appointments does that create? How many appointments were met from those appointments to create a contract? How many contracts were actually stayed alive? How many closings did it actually create?
Yeah.
We have a formula for it now, but like,
Right.
it takes time to figure out that formula. And then what your actual cost per lead is. AKA taking her to dinner.
Yeah.
Right. Do you ever find that, like, I always think of time spent versus, the money. We touched on time and money. And I always find that there's a vast majority of people that are willing to take kind of the risk that you made mention of, save money on the car insurance type of situation, and then find out, and then they're scrambling and they end up spending a ton of time to, for lack of a better term, fix the situation, rent from a national carrier, they're an hour away and do all of it. And they sometimes seem to still go to bed at night and beat their chest and be like, well, at least we saved on our insurance.
I know. I know. And
that's the part I never get. Like,
that goes back to his point, though. Like, they're advertising incorrectly.
Because on the lending side of things, like, I can't tell you how many times, like I said, we'll get the phone call afterwards, and I'll even have agents call and say, hey, how would you handle this situation? Here's what the lender is doing. And the client's not moving forward with me. They were dealing with someone else. And I've, like, talked to other salespeople about this, and it's astonishing the amount of people that will prefer, I don't know if it's prefer, but it seems to be easier for them to just to tell themselves, oh, this is the process, this is how it goes, like, and then when they're done, they're like, well, I wish I would have gone this route. But either way, I saved a bunch of money.
yeah.
You know who does a really good job with this? I wouldn't go with them because I have other relationships, but just on the advertising side, Fisher Investments.
Okay. I'm not familiar.
All right, we're here to be your fiduciary. We don't make money on any commission-based products. We don't do anything. We're here to build a relationship with you and build a trust with you, and we're not here on just based off of pricing. We're here to actually be your fiduciary, and they advertise that part, right? Like, yes, I have my go-to people for high net worth or other financial advisors, whatever it might be, right? Like, I would go to those people direct.
Sure.
But we're talking about the advertising space on the insurance side of things. Like, imagine if, I don't know, let's say State Farm. All of a sudden, they're like, we're here to, you know what? Here's my nuggie with whatever his name. What's his name?
Jake.
Yeah, well, Jake, but no, what's Coach? Chiefs. Why am I blanking?
Coach.
Andy Reid. Okay.
Oh.
Andy Reid's playing with his fucking nuggies. He goes, that's my little nuggies, right?
Yep.
And then you somehow turn around to where it's like, now Jake's the fiduciary. Don't worry, I'll take care of your nuggies. Don't worry how much those nuggies cost. I don't know. Just change the way it's kind of talked about and see if it actually works. You do, like, what, 2 or 3 new commercials every 2 months?
Yeah.
Like,
Well,
try
I think
one that way.
I think the tough part of it is that it's easy for a client to say, you would say that. Like, of course you would say that. We had Todd Bailey on here, and he talked about, he had lenders that he was referring stuff to, and that the lenders he was referring it to, they were getting beat out. And I got to put Todd on blast. He said, hey, I don't need, you're going to do the service and everything like that, but I need you to land the deal. The only way that, the guy was going to land the deal was to cut costs, right? So even real estate agents, will say things like that. When then in the reverse side, out of the other end of their mouth, they'll say, oh, it's all about value. It's all about the value that it's like, well, which is it? Who's the commodity, me or you or both?
Right.
Right? So it's tough. It's tough because then when you try to pitch value, it's of course you would say that, which is why with the referral stuff, it's so powerful because now you've got someone else basically speaking for you.
But seriously though, value is only brought up in the absence. Sorry, price is only brought up in the absence of value, though.
That's true. It's true.
So like, you wouldn't have that thought though if the value was initially there.
Well,
so clearly the guys I'm gonna put Todd up last with you. The guys that Todd was talking with, right? There clearly was not value there, which is why he then went to price.
Sure. Well, and the only thing I would say to that is you get under contract and then all of a sudden, maybe that's the point. Maybe I'm having an aha moment here that clients don't see value in their time as much as they see value in their money.
I would agree 1,000% with that because, how often do how often do you think about, I make X amount of dollars an hour. And for me to, haul this junk away, it's going to take me 4 hours.
I used to not to. Or, that wasn't in English. I used to not think that way.
Yep.
And when I did, my entire business
Changed.
went like this.
Yes.
I think about it from a stress level standpoint. I can't tell you how many people that, you talk about the purchase process, because one of my kind of qualifying things that I say, have you ever purchased a home? And if someone says yes, I'm like, what was that experience like? And a lot of people were like, oh my gosh, it was so stressful.
Yeah.
I had to get all this stuff together. I had to do all of these things. And I sometimes think that when people are buying a home, it's almost like they like that. It's like hey, how you doing? It's like, oh, I'm swamped.
Yeah.
That I'm so swamped. Where, again, valuing your money over your time, I don't know, man. I think being stressed out is fun for people sometimes.
Well, I think it is. They got to have something to complain about, right?
Do you know where stress? Okay, this was actually in the coaching/training thing I was at yesterday. Okay, frontal lobe doesn't develop till you're 25.
Yeah.
Okay, when you get into a stressful scenario,
I think mine's still developing.
I'm still fucking retarded. Okay, when you are in a stressful scenario, chemically in your body, what's actually happening?
Oh, I don't know.
Cortisol levels
Cortisol,
going through the
okay,
roof.
Yeah.
And if your cortisol levels through the roof, this thing doesn't work. You make bad decisions.
I've definitely had some clients that after closing, like right before closing, they're great to deal with. And then after closing, it's almost like they come out of this, I don't know what you would call it, trance.
Right.
And then they're cool again. They're like, oh my God, I'm so sorry. I was a total.
Sorry for everything I said.
Right. Right.
So and then Renee was going through this. Renee being a guy, Renee Rodriguez.
Oh, yeah.
Was going through a thing, and he was saying, all right, so we have, this is the part where he went beyond me, okay? We have number one in our brain, and we have number two. Okay, number one, when I refer to that, is the frontal lobe making decisions. Number two is going to be where deep thought is. So when you're going to bed, you're like, all right, I'm working out tomorrow morning at 5 a.m., and I'm all jazzed up, I'm pumped up, we're going to go to bed at 8:30, we're going to be great, okay? It's the back of the brain kind of doing its thought. As soon as you wake up, what's the first thing that goes on? Frontal lobe, number one, saying, no, go back to bed. You'll be fine. Go back to bed. Because that is what immediate response is going to be. The actual back portion of your brain and however the chemicals work is where the actual real thought is. And that somehow, when you wake up, that has to take over to actually make the correct decision of what you're actually wanting, because this tries to control everything else. And when he was going, I didn't explain that nearly as eloquent and professional as he did. That's just dumb brain, understand how I heard it.
I gave you his book, right?
Probably.
Amplify. I still have 12 copies. If you'd like one, I will give it to you.
Would love one, yeah.
They're signed too.
It's really good.
Yeah, I've seen
He's also fucking jacked.
He's a big dude.
He used to be 315 pounds.
He did something like kickboxing or
He did. He goes,
Yeah.
there was the guy that was Renee when he was 315 pounds, just loving, just slaying burgers.
Yeah.
He goes, and guess what? That was the happiest Renee in the world.
He's a big dude.
And then when I realized I couldn't go play with my kid, I couldn't get off the couch.
We used to meet with him once a month. Gold Star had him kind of, on a thing, and we met with him once a month. And then I've met him in person quite a few times. Had dinner with him and everything. Really great guy.
We took a pitch together yesterday.
Nice.
Yeah.
Very good.
Yeah.
Someone who really knows somebody.
Yeah, we locked eyes while we're taking a piss.
I'll give you his book.
Okay, great.
So yeah, going back to clients and everything along those lines, trying to keep it real estate related. Frontal lobe, clients being panicked, freaked out.
Go back to it, because there's, and I don't know what it is like in y'all's business. I think that
it's very similar.
Well, from I think people have a misunderstanding of what y'all make, what I make in a transaction.
Yeah.
Real estate, I think most people know, well, they're getting, anywhere between 2 and 3 and 4, so whatever the number is, right? Lending probably the same way. What is interesting is most people think that when you're selling an insurance policy, that most of that money goes to the advisor. And so when I'm talking to somebody and I'm like, look, I'm asking you to buy this piece of coverage to prevent this loss from when it happens. It's causing you an out-of-pocket experience, right?
Right.
I'm making $150 off of this.
Yeah.
Okay? I'm not even going to be able to take my family out to dinner after taxes off of what I'm making.
Mm-hmm.
So what I have found when the price thing comes up is, guys, I'm not getting rich off this transaction.
Right.
Okay? I'm making a little bit of money off of this for providing my advice. And then people are like, well, why are you in this business then? That's not a lot. You're not making a lot of money. Well, yeah, but I have to do it for like 1,000 people. And then I'm making it. So it's not that I'm asking you to buy this so that I can go to Tahiti tomorrow.
Yeah.
You know, I'm making a fraction of it. But you have to listen to what I'm telling you. Do you understand the value of information you're getting for that $150 that I'm going to make?
Yeah.
That oftentimes turns the tables because then they realize, well, this guy's not just trying to get me to buy something because he's going to make a boatload of money. It's, well, this guy really cares.
Yeah.
So I've just found being completely transparent in that process and saying, I'm going to make $300 off this. It's not a lot, you know, but I'm going to make money because you're going to be my client for the next 25 years. And that's how I'm going to make my money.
That's a good point. I had a similar conversation, but I didn't finish it out the way that you did. Maybe that was what I should have done. Ultimately, you know, going back and forth with another lender where it gets to the point where, you know, I can do a deal for free, right? And I said to the client, I said, you like me, right? He goes, yeah, man, I'd really like to work with you. I said, well, you'd feel pretty bad if you knew that I literally did this for free, right? And he goes, yeah, I don't want you to do that. I said, yeah, then I'm gonna have to back out on this one because it's just getting to the point where, you know, I'm letting my competitive side get the best of me. And that was kind of how I finished it out. But I think if I would have said, hey, you know, I'm doing this for a reduced price or even entertaining it because I want to work with you in the future.
Right.
You know, I don't want this to be our last transaction. And that might have been a nice touch because he totally understood when I was basically backing out the door where it was like, you know, and I think that most people, to your point, when they hear that you're doing it at a low cost, they kind of ask, because I've had that happen where if I've admitted, I'm like, listen, you know, you're really putting the screws to me here and I can't even get a steak dinner on this. And they kind of try to flip the script and say, well, why are you doing it then? Like, you're an idiot. Like, you know, if you're dumb enough to do this deal for free, like, what's the why behind it? And I like that. I like the, you know.
So ours is, and this is what I got from Dietz's coaching. Lease agreements getting signed. The only objection they have is my commission. I call it porcupining. I solo in on just the one objection. So you're ready to move forward, Todd, but the commission is the only issue, right? So if the commission was less, you would move forward? Okay, here's what we basically end up doing. My commission right now, it's not negotiable. Commissions are negotiable, but at this point, it's not negotiable. But if we get in the future and that commission is basically holding up a deal, I'm going to make sure that I'm going to be your deal maker, not your deal breaker. But as of right now, we are at 3%. With you understanding that I'm not going to be breaking a deal because of that, because I do want to close the transaction. I don't get paid unless you get paid. Would you be open to moving forward now? And then it usually works.
Yep. No, it's good. It's good. But I like the long-term aspect of it because I've been doing this for over 20 years, and I think a lot of clients don't. I'm doing a deal right now. Once we get out of here, I have to call this woman, and she bought her house 5 years ago, and she's selling. She wants to get into a new home, and she contacted me, and she even kind of alluded to the idea that it's like, man, when I purchased my home, I thought, oh, you know, that was great. She wrote me a review, and that, you know, she'd never hear from me again. And here we are, and I tell people, I'm like, time flies, man.
Yeah.
Like, you know, we'll be in touch before you know it.
Well, I was on a meeting yesterday. How Higginbotham is arranged is, you know, my silo is in commercial insurance. Like that's where I spend the vast majority of my day. But if I have an opportunity that might be a personal lines, it may be a 401k opportunity, it may be a life insurance opportunity, it may be a benefits opportunity, we can pass that to a producer that focuses on that particular coverage. And then we do a revenue share on it, right? I don't go away. I'm still part of the relationship.
Yeah.
And so we had a call yesterday, a company that we are going to be taking over their entire commercial insurance portfolio. their 401k and their benefits. And my 401k advisor, we were on this call, and he said, well, just to give you a little background, I've been with this organization for half of my professional life. And I've known Todd half of it. And he said, so you'll see a lot of advisors in this space. Back to what you talked about earlier, they'll do it a year or two, and they're not in it long enough to really see, And he goes, so my point is, I'm not leaving, So as you scale this 401k program, and as you need to add things like cash balance plans and things like that, I'm going to be here and answer the phone. It's not, I'm not just, some guy's going to be here and then 2 years, 2 years later, I'll be selling cars or encyclopedias or something else. And I was watching, we were on Zoom, and I was watching the lady's face because it's the first time I ever heard him say that. We've been working together for 13 years. And it resonated. I was like, you know what, that meant something to that client, because through our due diligence, we looked at their existing 401k plan, and we found out that the trustee on the 401k plan was the director of HR, where the trustee should have been the business owner. So as a trustee, you are financially obligated. If the 401k plan goes to hell in a handbasket and everybody loses their money, you're responsible. And so we pointed that out, and the sight of terror on her face.
Yeah.
And we're like, we're going to fix it, right?
Thank God nothing happened.
Yeah, exactly. So, I think longevity and being in it it's a marathon, not a sprint. I know it's cliche, but I say it all the time.
It's easy to say when you've been doing it long enough. To newer agents, I see the look on their face when, I'm like, hey, this will really start to turn 2 years, 3 years. They're like, 2 or 3 years? Yeah, I don't have 2 or 3 years.
I don't have that kind of time, yeah.
And then 2 or 3 years later, they're still doing the same shit,
Yep.
But their business hasn't grown because they're a 1-year agent 5 years in, 5 times.
Yep, exactly.
Right?
But, what I think is important for y'all to know in your industry, I think in the past, insurance has just been the component, right? I say this all the time. Lenders are sometimes the bane of our existence when it comes to a closing, whether it's on a piece of a home or a business, a piece of commercial property. And it's all about what's the price and does it meet DTI and go ahead and go on. The fact is, insurance is not going to get cheaper.
Right.
The fact is, insurance is only going to get tighter to buy. It's not like we're going to, come April, it's just going to be, tulips and rainbows and capacity is going to open up. It's going to get tougher and tougher and tougher to buy insurance, primarily in the state of Texas. Texas has wind, we have hail, we have cyclones, we have wildfire, we have drought. People don't think about the agricultural losses that the state of Texas farmers and ranchers take on every year because of drought or because of a wildfire burned up 30,000 acres in West Texas and they lost 15,000 head of cattle, right? Sometimes you don't hear that in the news. So we're getting all of it. Circle back when we talked about the Malibu fires, I nerded out and I found a report through CoreLogic, which is like y'all probably know who CoreLogic is, but they did a report on the number of homes. This is not commercial businesses. This is residential property only. They did a report on the most property in the riskiest states and metro areas in the United States. California is the highest risk state for wildfire, followed by Colorado, and then the number 3 state is the state of Texas.
I believe that.
Yeah. Then it broke it down by metro areas. And this is for homes that are in moderate to increased or greater wildfire exposure. The first 4 cities in the nation were in California. LA was number 1 and followed by 3 more. The 5th highest city metro area in the nation was Austin, Texas.
No way.
Yeah. $88 billion worth of residential property that is sitting in a moderate to greater wildfire hazard area.
That's interesting. So
I tell people this all the time.
It's crazy with our humidity.
Yeah.
What area specifically?
Well, if you look everything west of 35.
Okay.
You know, you look at Westlake, you look at Lakeway, you look at Spicewood. It's all cedar trees. Cedar trees are oily. They ignite. Even when they're fresh, they will still catch on fire. So with the humidity we have is one thing, but if it's been dry enough and we haven't received a lot of rain, which we look at Lake Travis, where is it right now? Right? We're still in a drought. I tell people, man, it's a matter of when, not if, we're going to have a major event that is going to impact the insurance market here locally. Houston, it's difficult for property because of wind. Dallas-Fort Worth, it's difficult for property because of wind and hail. Austin's going to start getting difficult. I already see it. I've seen carriers that are getting...
Are we just hail right now?
Hail, mostly, but it's the wildfire. You're having some carriers starting to rate for wildfire in Texas, where in the past they haven't. So mitigation is key. Trimming branches away from your home or business, clearing brush, 60, 80, 100 feet away from your home, that is critical. Any type of sprinkler system that you could have on the exterior of your home is helpful. But it's wildfire. It's a major player.
It's interesting.
Yeah, on insurability. Yep. Great story. We had I got referred by a current client, lives in Barton Creek. Neighbor lost their insurance, their carrier, which in my opinion is one of the best insurance carriers in the world, getting off the risk. So it's written through another advisor. So I said, well, listen, if you give me an opportunity, maybe we could, there's a thing in our industry called broker of record, BOR. We could transfer the policy from your current advisor over to us, and maybe we could have a different conversation with underwriting that we might be able to find a little bit of flexibility. Sure, go ahead. So we reached out to my underwriter. And they were like, no, we've remapped our wildfire zones, and they're in Barton Creek, the neighborhood, and they back up right to the Barton Creek Greenbelt. And she was like, look, I'm looking at the Google image right now, and there's a lot of brush around it. I said, look, you're probably looking at an image, 3 years ago. Let me go out there and I'll drive by the property. So I got in my truck, I drove out to Barton Creek, I drove by the property, I looked at it, you could barely see the house from the street. And I called her and I said, I understand why you're getting off of it. It is a tinderbox. And his premium doubled.
There's this misconception. I'm originally from Cleveland, Ohio.
Okay.
Trees grow on trees up there. And we're constantly cutting down trees and taking care of trees. And when we bought this place, there was a big cedar elm that was hanging over that we couldn't get insurance because of it. So we got someone out here, and they fought me tooth and nail about cutting this fucking tree down. And I'm like, what is going on with, these tree huggers literally around here? And it wasn't even like a live oak or anything like that. It was a cedar elm. And it's like, they're like, we can just trim it back. I'm like, cut the fucking thing down.
It's a weed.
Yeah, I don't want it here.
Yeah.
And you see that, when we had the whole freeze with, people that were freaking out about, coming afterwards with the power lines. I was watching it on the local news, and homeowners being like, "Don't cut the live oak tree, don't cut it." And it's over the power lines and everything, and that's an Austin thing, man.
It is an Austin thing. Number one, part of it is the golden cheek warbler.
Okay,
you heard of it?
Enlighten me.
Teach me.
So there is a bird. It's called a golden cheek warbler. I'm not an ornithologist, but what I do know about this bird is it migrates. I think it comes from South America, it comes up to Texas, and that's where they mate, breed, and then they head back, right? Well, they love cedar trees. And so all that Balcones Canyon Land Preserve, all that is land that we'll never be able to develop, do anything with because
Is that the bird that looks like a seagull? But it's not a seagull.
Maybe.
Okay.
Who knows? But they do have golden cheeks. It's quite a pretty bird, but...
Okay.
But there's a bird that you cannot do anything about it because this bird is protected. It's an endangered species.
So you don't know what they taste like?
No, I have no idea.
Okay.
But maybe in South America they do. That's why they're endangered. I have no idea. But so that's part of the process or part of the problem of and plus it's Austin it's a tree hugging community and they love their trees. Aesthetic. I get it
until their pipes burst because of the freeze and all of that.
Yeah. Well, people don't understand too is particularly on the cedar tree. It sucks up water out of the ground. So, next time you drive by a piece of property and you'll notice where the cedar trees are, they're typically underneath live oaks. Why? Okay. Well, an oak tree spreads their they go out and they go deep, depending on the type of oak. Well, they want water, so they're going to go where the water is, and that's why so many of them grow underneath oak trees. Well, then guess what? They're sucking up all the water that could be taking care of the native live oak tree or post oak tree or blackjack oak, whatever, and eventually it'll kill that tree out.
Trees, man.
Yeah.
I never saw so much talk about trees until I moved down here.
But it's interesting because you had an insurance problem because of a tree.
Yes.
And it's an issue.
And that tree no longer.
Exists.
That tree is stacked in the back right now as firewood.
Slid it on that one.
I'm not joking. The arborist who came out and did all the things and they measured it and it met the metric and everything, he said, yeah, we'll trim it back. I said, I'll just get rid of the whole thing because it's in between two houses and then it's going to be all fucked up and it's just going to grow back anyway.
Yeah.
And it's not even like, again, to your point, it's like a weed. And he looks at me dead in my face, locks eyes with me and goes, man, you really want to murder this tree? That's what he said. You want to murder this tree?
Murder this tree.
I said, yeah.
Yeah, I'm ready to slay this dog.
Like, murder that fucking tree. Yeah. If it wasn't in between the houses and I was a little bit better with the chainsaw, I'd murder the motherfucker myself.
Myself.
If you feel bad, I'll deliver the final blow.
But, so to your customers, it doesn't matter what they're buying. Could be buying a commercial building, could be buying a home. It is the cost of insurance and the type of insurance that they're going to get is critical. It's absolutely critical, and a lot of people try buying this stuff online themselves. They don't know. You look at a declaration page of carrier A and a declaration page of carrier B. I don't care if it's a personal lines carrier or a commercial lines carrier. They're identical.
Yeah.
What matters is the policy contract language. That means everything. And so oftentimes, and I've done this, I have printed out in its entirety an insurance contract. And I've stacked the paper.
And one's like this, and one's like this.
Yeah, they're different levels. The thicker the stack, the more limited the coverage.
Gotcha.
Because there's just going to be more,
more shit for
exclusionary
them to be able to get out of.
Yeah, more exclusionary language.
Which is why private would be like this.
Yeah.
And then there's progressive.
Mm-hmm. Yeah.
Got it.
So it matters. We can get into the weeds if you want to, as far as, how insurance is priced, what all goes into it, what is affecting the insurance mainly is the cost of reinsurance. You ever heard of reinsurance?
No.
So any insurance company that you buy insurance from, carrier name here, they're buying reinsurance.
Okay.
There are about less than 10 globally companies that buy other insurance companies' risk. So, give me a name of an insurance company.
State Farm.
State Farm. State Farm says, look, I've collected all this premium in these states, okay? Mm-hmm. We're willing to self-insure that risk up to, I'm literally going to make up a number, up to $500 million, okay? Because we have enough cash reserves that we can afford to pay out $500 million of cash if there's an event. But if an event occurs and it's going to cost us $500,001, I need to buy an insurance policy above $500 million. So they go to a reinsurance carrier. Swiss Re is one of them that comes to mind. They go to Swiss Re and say, look, here's our portfolio, here's our book of business, here's where all of our risk lies. We're wanting an insurance policy greater than $500 million. And so Swiss Re says, sure, they do their actuarial science, and they give them a proposal, just like you're given a homeowner's proposal or auto proposal or general liability proposal, and they say, yeah, I'd like to buy that. And they transfer the remaining
to
risk.
You,
yeah.
the client, right.
So the reinsurance carriers, because of the increase of frequency and severity of these weather-related events, the reinsurance carriers are being tapped for claims more than ever before. So the reinsurance costs, and by the way, these aren't like $3,000 a year premiums.
Right.
They're enormous. And so the reinsurance costs have gotten more expensive to your State Farms, your Farmers, your Nationwide, your Safecos, your
So they have
Liberty
to
Mutuals.
increase their premium.
So they're having to increase their premiums. And all of that rolls downhill.
Basically, they're hedging.
They're hedging. So really what an insurance company is It's a giant wealth manager. That's all it is. They collect our money in the form of premium. That premium sits in their general account. They're going to pay commissions. They're going to pay salaries and marketing fees and so on, payroll, whatever. The overwhelming majority of that money is invested. Okay? But full circle going back to the state regulators, every state has different requirements of what they can and cannot invest in. And then they have what's called reserve capital requirements and surplus capital requirements. Meaning you got to have enough cash on hand in order to do business in this state.
Gotcha.
And they limit what they can invest in because they can't invest in anything that is too risky, because if they lost all of the insured's money in form of premium and an event happens, they don't have any money to pay the claim. So most of their investment options are tied to bonds. So where have bonds been? Let's not talk about the last 3 years because rates have increased, but where have bonds been over the past 10, 15 years?
They've been low.
They've been low.
Yeah.
So when they buy an investment vehicle, those vehicles are typically multi-year vehicles tied to bonds, and the yields on them weren't keeping up with the inflationary pressure. So there's two ways an insurance company makes money. They can make money through underwriting income, which is premium, or they can make money through investment income. Yeah. Insurance carriers make money. Their profit comes from investment income. It just does. So what happened was they're tied up in multi-year contracts and tied into low yields. They have to go to underwriting income to increase their premiums in order to keep pace with reserve requirements and surplus requirements, as well as they got to eke out a profit.
Yep.
And so you're seeing, or you saw, a dramatic hockey stick of premium increases because it happened overnight. Going back to your comment, it was a perfect storm. It was inflation. It was weather related. It was low interest rates. It was everything that occurred at one time. And every single insurance company just shot from the hip. And they were like, we went into DEFCON 5 panic mode and they started raising rates. What they've discovered is actuarially, insurance has been on sale for the past decade. We have not been paying the appropriate premium of what the real risk is. Insurance companies are graded off of their loss ratios. It's the amount of money they bring in divided by the amount of money they pay out. At 100, they're breaking even. If it's less than 100, they're profitable. If it's more than 100, they're losing money. Over the last 3-4 years, don't hold me to it, but the insurance industry has been running about 103.5. They've been losing money.
Yeah.
The biggest loss is on auto. I mean, a carrier out there right now writing auto insurance that's profitable. So,
what's the why behind that?
Retards? Just kidding.
Yeah, well, I mean, a couple things. Number one, there are more people in metro areas than ever before.
Okay.
There are more people that are distracted than ever before.
So it's accidents.
It's accidents.
It's not theft.
This thing right here.
Yeah, it's that thing right there.
Okay.
Also, when's the last time you replaced an $800 bumper?
I mean, I haven't had any issues.
Okay.
Well, no.
No, that's right. Ina did.
Yeah. Go look at all three of our vehicles right now in the parking lot. Every single one of them have sensors in the bumpers. Front, rear, doesn't matter.
They're like $5,000.
Yeah, every bit, $5,000 for a fender bender. I ran into one of those protective posts at the gas station, $5,000. You drive a Tesla,
Yeah.
$15,000. Yeah. So the cost to repair these vehicles has increased dramatically because of the technology behind them. You know, there was a day where
Gap Insurance is just like the greatest thing in the world right now.
It is. It is. So it's driven the cost of insurance out of the roof for predominantly Texas drivers, because where did everybody move during COVID?
Yeah.
A key.
They moved here, right? A lot of people just moved here. More drivers on the roads. They don't know where they're going. They're distracted. They're just getting into accidents.
Especially in Dallas.
Yeah.
Dallas driving is fucking nuts.
So you've got an increased cost of doing business in the insurance world. And again, they need to make a profit in order to pay your claim.
Yeah.
And so we are all faced with these increased costs. Little bit of good news. I read in the Insurance Journal last week in the latest edition that when it comes to casualty insurance, liability, directors and officers, general liability, professional liability, workers' compensation, those sort of things, we're forecasted to see flat, if not decreased premiums on those sides. Property is still going to be an issue.
Yeah.
And it will continue to be an issue. Why? Well, we've built improvements where 10 years ago there were none, right? We've taken over, whether it be woodland, marshland, whatever the case may be, and now there's a strip center there. The storms, for whatever reason, I don't care. It's not a political thing, but weather has changed.
Okay, it's just stronger.
It's stronger.
Yeah.
So I grew up here, all right? There were 2 times that I remember being a kid. One time was after Mount St. Helens erupted in 1980-81, and the ash in the atmosphere affected the weather pattern in the southern states. And when I was 10 years old, in 1985, we had like 13 inches of snow in San Antonio.
Oh, wow.
Right? Unheard of. Never seen before. It was a lot of fun for the 3 days that it was here, but I grew up, I didn't see snow.
Right.
So that was an anomaly, right? Because we had an event that happened up in Washington that over time impacted our weather pattern down here south. There were a couple times when I was a kid that, it got down to like 5-7 degrees. It was like a one-day thing. But if you noticed, it's getting hotter here.
Yep.
And it's getting colder here more frequently. I could care less what your political affiliation is. I could care less what the reasons why you think it is, but it is changing.
Yeah.
And it's causing actuaries, the people that price insurance, they're on their heels because they've never been in this environment, pun intended, before. So how do you price for stuff like that?
Yeah.
The Winter Storm Uri in 21 that broke all of everybody's pipes and broke everybody's trees, that was by far one of the most costly events for the insurance industry. Just that one single event, for most carriers, because a lot of property down here that got damaged based off of a small little copper pipe that decided to bust.
Yeah.
And you're not building property here to withstand those low temperatures for that long.
Right.
Yeah, it's not.
Well, and when your electricity goes out and your house isn't heated, that doesn't help either.
Doesn't help
Or your
either.
apartment complex has got no heat coming.
Did you watch that video? So this is random off topic. Did you watch the video I sent you with Shane Gillis going to church at the Jamaican church?
No.
Okay. He goes, "Oh yeah, we're here from Ohio." I goes, "Oh, you're from Ohio?"
Yeah. Yeah. It's a little different weather up there for sure. A little different. You're used to the cold.
As soon as you started saying like not building for that type of environment.
Right.
Yeah.
Right. What
All
else
right.
do we need to know, man?
Oh gosh, how deep do you want to go?
Well, I want to ask you, what's the, what's one of the things I always ask is, what's the ideal referral partner for you? In other words, we know who you're looking for in terms of insurance, but is there an industry that seems to, kind of having an edge in referring clients to you?
So on the personal line side, I love working with the private client individual, right?
Okay.
They're buying that $2-3 million home. It's going to cost to replace. It takes just as much work to quote and work with somebody who's buying a $500,000 home as it does a $5 million home.
Sure.
The only difference is the $500,000 home family, they don't have as much to lose. So they're going to be your price shoppers.
Yeah.
They're going to be the ones that say, well, if my rate goes up about $10, I'm already stretched buying this house. When you get to that private client space, they do have something to lose. They have exposures that they're not aware of. And we have products that are built for them that will cover the fact that maybe they sit on a nonprofit board and they need D&O coverage, directors and officers coverage, through their homeowner's policy, because maybe they don't have enough under the nonprofit that they serve on, or maybe the wife serves on. The contracts, they're written differently again, going back to we print them out and stack and see how high they are. They're shorter stacks, right? Which means there's broader coverage. And there's broader check writing ability when it comes time for a claim. Their goal is, how can I make you whole again as fast as possible? Here's a check.
Sure.
So those from a personal line side are great referrals to me because they understand when I start talking about, I'm not going to be your cheapest guy.
Yeah.
But I'm going to tell you why you want to use me is because I'm going to tell you what you have going on that no one else is telling you about. They'll listen because they got something to lose.
Right.
From a commercial standpoint, man, I love complex risks when they got stuff going on that they had no idea. I'll write. I'm in the middle right now of writing a very, very, very large contractor here in the state. So I'll go in here from the contractor side to I'm writing stuff that has extreme cyber risks, in that space. What I like on the commercial side is dealing with a business owner or a CFO or a chief operating officer who needs somebody that is going to act as a risk manager for their business, not just give them a proposal and say, here you go. And by the way, I'm a licensed risk manager in the state of Texas. All that means is I can charge you for my advice.
Sure.
And so I love it when they bring you in as a resource of, we need your help because we're getting ready to scale our business. And I need to understand what the exposures are when we go from $500 million to $1 billion in revenue. What does that mean for us? What do we need to put in place? That's where I do our best work.
I love it, man. We got to get you back on here.
Yeah,
there's a bunch of stuff.
Appreciate you having me.
We schedule stuff out time wise, and I tell everybody who comes on, we'll give you the link to book, but it is one of those things. The first episodes, with you is really designed to just get to know you and what you do, and then I would love to nerd out and deep dive more in insurance.
Let's do it. Yeah, let's do it.
I can see your passion for it, and I enjoy these conversations.
Well, I appreciate you guys having me. I really do.
Totally, man. Yeah. You crushed it. Nice work.
Awesome. Thanks, guys.